called Tinotenda Kachiko. You're saying, what is the name of the book? I just told you. It's Eeney, Meeney, Money and More. How to save and invest 70% of your income. Karibu sana, Tony Olang. Now, we were talking about something very, very powerful off air while the music was playing. And you're saying, we need to get into the habit of simplifying investments and this conversation of investing, the art of investing. Please elaborate. There you go. Put there.
Thank you. Simplicity is key.
Yes.
In this conversation. The reason why most of the time we lose our audiences, wherever we are sitting or whenever we are talking about investing, is that we make investing sound very complex.
I agree.
Yes. And I often like to begin conversations by referring to the 5 things anybody can do with money.
Yeah.
Number 1, you can buy things.
It's true.
Yes.
Yeah.
Number 2, you can pay for services.
Uh-huh.
Number 3, you can pay for experiences.
Wow.
You're going for holidays, you're doing this, you're doing the other, you're paying for those experiences. Number 4, you can donate this money or give it away. Philanthropy. And number 5, you can save and invest.
Correct.
So when you're talking about money and you're trying to simplify money, the moment it comes into your hands, the question is, which of these 5 things are you going to do with the money? And we've already talked about the law of 72. How you can double your money and how you can estimate how to double your money.
Great.
So an easy entry point, without going into the more complex asset classes, is to pick a collective investment scheme, and we can call it a money market fund.
Great.
On a regular basis, if you're earning monthly, you can take a proportion of your income and deposit it into this money market fund.
Right.
And at the end of the first year, you'll be able to see what has happened to that money. And the other thing that you could also do, because sometimes you ask, where is the money going to come from? As you do your budget, you can ask yourself, what things on my budget can I move around or can I reduce?
Right.
And the last time we were talking about 10,000 shillings. If you invest 10,000 shillings in this money market fund that's giving you 10% return for 30 years, you will have 22 million shillings sitting pretty in that account.
Look at that.
Yes. And you had only put in 3.6 million shillings in capital. Everything else is compound interest.
It's amazing because most folks usually imagine, what, Kevin, 10,000 shillings. Surely it's nothing. It's pointless for me to even invest. I'm broke. I don't need to. Let me just spend this money. And I always say, I think the biggest detriment to our society is this whole thing of consumerism. We imagine that the little money we earn, we can't even invest it. So I'd rather just spend it and wait for the next paycheck.
It does happen that we have different philosophies and we have different strategies. What we don't know is what tomorrow is going to be like. That uncertainty could also be a factor that encourages you to put aside some money.
It's true.
And when you put this money aside, we are heading back to what we were calling passive income.
Yes. So switching some gears, portfolio rebalancing, like you said, some of these terms sound very technical.
Yes.
So if you can break it down for somebody hearing us for the first time, make it very simple. Portfolio rebalancing to the layman out there.
Yes.
What's the story?
Assume you have four asset classes. You have some money in cash, you have some real estate, you have some government bonds, and you have some stocks. What will tend to happen is once you do your asset register, the average Kenyan is likely to find him or herself having what we would call overweight in the immovable property or real estate quadrant. Your ability to sell some of these plots which are not generating any money and redirecting that money to either money market, stocks or bonds is simply what we can refer to as portfolio rebalancing. You are removing some money from one asset class, and whatever proceeds you get from there, you're moving it into another asset class so that you can balance the weights in line with what we called your risk tolerance earlier. Yes.
That's interesting.
It also does happen that, say, you invested some money in one of the listed stocks sometime mid last year. Some people have gotten 700% increase in the value of that stock.
Yeah, I can imagine.
So if you put 1 million, it's now 7 million.
Yeah.
And maybe you feel that this 7 million is too much. I need to remove some of it from the stock class and move it to maybe government bonds, or put some into the money market. So this is what you call portfolio rebalancing, yes.
So these days, when I talk to most guys my age, millennials basically, our age.
Yes.
They say, Kevin, land is the main thing these days. I have to buy land, and then I just fence it, I leave it over there because it's obviously going to appreciate in value. Yeah? You're saying if your land is just lying there idle, you'd rather sell it if you can and invest that money on something else. Now, my question is, generally speaking,
yes,
the necessity of portfolio rebalancing as opposed to just investing and forgetting.
Yes.
Putting our money there and hoping that, things are going to be good in future.
Yes.
What necessitates this process of rebalancing, really?
Let's look at the gentleman or the lady who's been buying plots. So you are told there's a plot in Joska, you go and buy. You're told there's a plot in Kamulu, you go and buy. You're told there's a plot in Machakos, you go and buy. You're told there's a plot somewhere in Juja, you go and buy. So after a certain number of purchases, you realize you have so much money held up in plots, and now you want to move this money so that it can generate something for you, either to cater for an emergency. And this tends to happen when you have a sick person in hospital. What do? You run and you rescue your relative or your friend by depositing a title deed in the hospital. And the hospitals have been quite considerate. They accept those titles because it's understood that there's a lot of passion behind the ownership of this piece of land. So you go in, you deposit the title, but please don't forget that bill still needs to be paid.
Yeah.
Yes. So what then happens after that? How do we convert this title deed into something that can generate cash flow? It can preserve capital and also grow on top of the capital that you had.
Yes.
So just to come back to your conversation on the plot which has been fenced and left there, undeveloped land has actually been accumulating value quite well over the years. I think there was a recent report that showed that there was about an 18% year-on-year growth in value on undeveloped land, especially in the outskirts of Nairobi.
Look at that, yeah.
Yes, but the challenge you will have is liquidity. When you need money, most people have these plots, but they can't sell them.
Yeah.
Yes, so what then happens? So you need to start, and chapter 1 of this book is titled, What Do You Want? That is where you start. Otherwise, you'll end up in a situation where you have too much house and too much car. Because these are the things that most people are thinking about.
When you say, what do you want? Is it like, are you talking about your purpose? What are we saying?
It is a holistic view to what you consider important for you in life.
Okay.
You may end up with land or houses that are beyond what you actually need.
Okay.
And you may end up buying cars that are beyond what you actually need. And then you find your money is evaporating through these two channels.
Yeah.
The cost of home ownership is actually quite high. The cost of motor vehicle ownership is also very high. And on top of being very high in terms of cost, the vehicles also depreciate at 25% every year. The other day I was in a meeting where a lady said she wanted a certain type of vehicle. And we asked her how much it cost. She knew. She said it's 15 million. So we just made it clear to her that in year 1 of your owning that vehicle, it will lose 25% of that 15 million. By the end of that session, she said she doesn't want that.
You didn't have to scare her.
I didn't scare her. It's the truth.
It's the fact, yeah.
And it was going to cost her 10,000 shillings per day in depreciation as she owned that vehicle.
It's amazing.
There are people who can afford those vehicles because they are doing tax write-offs. But are we all doing tax write-offs?
Yeah.
Those are some of the things we don't understand in the simplicity of what it takes to grow the little capital you have.
So the economy is very unpredictable, like we established earlier. But so rebalancing, how often should you do it, I guess?
Well, you could probably do it as often as you should.
Yeah.
I usually look at my register every, I would say, 3 months.
Okay.
So I have a board meeting with myself, and I ask myself what needs to go this way and what needs to go that way.
Yeah.
Yes.
That's interesting. So you talk about risk tolerance and having a contrarian mindset. What does that mean for the average Kenyan investor? Elaborate, you can educate them on those terms. Risk tolerance, we touched on it a bit, but also a contrarian mindset.
Okay, I'll start with risk tolerance. And I'll use the stock exchange as an example. We know that the stock market has a cycle, and from time to time it will go up, and then it will have a season where it goes down. And once it's gone down, you know that it will then come back up. The question is, if your value in your investment of the stock that you invested in sometime last year has gone up 7-fold, starts going down, how much further down will it go before you start panicking? That is what we are calling your risk tolerance.
Yeah.
And the question is, do you also understand that, yes, that price will go down and it will also ultimately still come up? When we are investing, we need to develop a mindset that we are investing in the long term. And just to build on what we've discussed there, is having a contrarian mindset, is that we have this herd mentality, that when someone is going this way, we decide to follow him. And when someone is going the other way, to another asset class, we follow that person.
Very typical of Kenyans. Yeah.
Now, if you are able to develop the ability to spot patterns and exit when people are coming in and come in when people are exiting.
So you do the opposite.
Yes, that's what being a contrarian means. So when the market has gone up and people are moving by sentiment and still pushing the prices up, you can lock in your gains and exit.
Yeah.
And when the opposite is happening, when the prices are coming down and people are panicking and selling, you can come back and buy when the prices are down.
Yeah.
That is what having a contrarian mindset generally means.
Yeah.
Yes.
But isn't that very risky, though?
It means you understand what you're doing. So the word that needs to support that is competence.
Competence. Okay, so you probably have experience now.
Yes. You need to build your competence to a point where you can make money when the markets are going up, and you can still make money when the markets are going down.
You can always notice patterns.
Yes.
Yeah, that's interesting.
Yes.
All right, so guys, remember you can actually stream live www.spicefm.co.ke and also call us on 0719012600. Now, there's somebody out there who probably has like a free 10,000, like a 50,000, 100,000, and they're thinking they want to divide this money between saving, putting it on passive income streams, or even just investing. How should they go about it? I know you touched on this a bit, but different asset classes over here going on.
What I would say is, even before you begin this entire asset selection process, what you're going into is asset selection. We have asked ourselves, what do we want? Once we've kind of figured out what direction we want our life to take, we then need to ask ourselves, how much money do we need in terms of being able to cater for your living expenses? Once you have an amount that you know this is my monthly cost of living expenses, you then need to build an emergency fund. So that should be your first step. Once you are able to put an emergency fund that caters for 12 months of living expenses, then you can get into what else you want to.
Is there a specific percentage that goes to the emergency fund?
I would say
advice, guys?
It's more about the number.
Okay.
Yes, because being able to scale up, it's a journey. And once you see the outcome of your efforts, you then get more encouraged to do more.
Correct.
So what we do tell those of us who are struggling to allocate an amount for saving and investment is start with 1%. It might look very small.
Okay.
But the progress that will come out of that is going to encourage you to make it 5%, 10%, and ultimately the 70% that you're talking about.
It's true.
So once you've sorted out your emergency fund, you can then do a money market fund. or a fixed income fund or some collective investment scheme as you are developing your competence. And once you've built your competence, then you can start doing the sort of things that we are describing.
Yeah.
That you can go in when the market is low and you can come out when the market is high. Yes.
That's amazing. Wow, I love it. Actually, my takeaway from that point you've made is competence.
Competence, yes.
You build your experience and then you have confidence. Competence.
Yes.
Which leads me to the next point.
Okay.
So that you said something about Kenyans. We like to follow the herd. And so obviously, when people listen to these types of conversations, they're thinking quick returns. Me, I just want that money, bana, bro. How can I double my money? How do Kenyans shift their mindsets from quick returns to actually building wealth for the long term?
We need to align our efforts, our financial efforts, to the things that we want to achieve over the long term. So you might say you want to build a family home. You might want to own a vehicle. You might want to do this. You might want to do something else. So once all this picture of what you're calling a holistic life is clear to you, you then start allocating monies to this. And things as simple as even Christmas holidays. If you can save for 12 months so that your Christmas holiday is more relaxed, that's the way to do it.
It's true.
So if you need a budget of 100K or 120K in December, you save 10K every month and you have 120K for your Christmas holiday. If you need 60K for your December holidays, you do 5K every month. Yes, and it becomes easy. You slice it into smaller pieces. Yes.
That's amazing. And I hope Kenyans are actually doing that because you guys were left with about 95 days to the end of the year. Actually, I think about 89 days to Christmas. So if you're listening to us, guys, this is Tony Olang. He's the author of Eeney, Meeney, Money and More, how to invest 70% of your income. All right? So right now it's 8 p.m. Tony.
Yes.
As I let you go, what is your word for Kenyans out there who have a sense of apathy? Guys are kind of mad. They're saying the economy is not making sense. Because I know we're going to have a part 2 of this conversation.
Yes.
And while you also give them some motivation, you can also tell us where we can grab your very amazing books. You've got a bunch of books with you here in studio. You can actually maybe walk us through each book and where we can grab these books. Because I have a few of them already. I'm one of the lucky ones. But maybe you can just tell us where we can get the books. And before that, actually also talk to Kenyans. Because they say we have a sense of Kenyans are angry, They're not seeing progress in their lives. Not all Kenyans, but quite a number, especially the younger ones. What can you tell them? You're their fund manager for this evening.
So I've been doing a few of these conversations. This for me is a journey to give back to society. The last time I was here, I mentioned that I've been privileged, I've been working in financial services, and I've been looking for ways in which to go back to people and engage with them on this subject of being able to save and invest. And it hit me that writing the book was probably the easiest way of being able to give back. So here we are in a meeting. A very senior gentleman says he's very convinced that property is the right way to go. And I ask him, okay, please tell us a bit about your investment properly. Do you have an asset? He says, yes. I ask him, how much do you collect in rent? He says, 35,000 per month. And I asked him, what's the value of the property? He says, very confidently, 8 million.
Yeah.
But if you look at 35,000 per month and you work with the 8 million, the gentleman is probably making 1% gross.
Wow.
Before the property has started demanding from him the repairs and replacements and whatever services need to go around ownership of that property. So in essence, he was subsidizing the cost of housing for someone else. Very senior Kenyan. Yes? I have another one. Same case. Very senior Kenyan. He has a 5 million apartment somewhere near Yaya Center. He has a good tenant who pays him 50,000 rent per month. It means for his 5 million, he's making 600,000 shillings per year. You can do the return on investment. We can do better than this. Yes? And this is where we are talking about too much house and too much car, because you've already got your primary home, you're living in with your family. You now have assets that you're investing in. You have put money in this asset, but it's not doing what it can do for you. Now, if my brother put his 5 million in the stock market mid last year, his 5 million would now be many times over, plus a dividend on top. So these are some of the subtle things that we say you could be able to put your money in a different way or employ your money differently. You could even be putting your money in government bonds. For those who are more conservative, you had asked about conservative investors, what would they do? Government bonds have been giving anything between 10 and I would say 18% over the last few months. The rates have just started coming down. So if you're getting 15% on your 5 million, that is 3 times more than what my brother is getting for his rental apartment in
100%, yeah.
So these are the things that we are asking our brothers and sisters to start doing. Let's build our competence. Don't be shy. Don't look at the conversation about investment and say this is the conversation for the guys who understand complicated mathematics. It is kidogo kidogo. That 10K you're putting, that 20K you're putting somewhere. As long as you can account for it and you're putting it in an asset that you believe is going to be supportive to you and is not risky, then I think we are heading broadly in the right direction.
Awesome.
There's another thing which most of us don't think about. Some of us say, let me eat my money because my children might just blow my money after immediately I have left.
Yeah.
The easier way to think about this thing is to think about your grandchildren.
Right.
Skip a generation.
That's interesting.
And then it becomes softer because most of us love our grandchildren. Yes. So if you omit your children from the equation and think about your children's children, it becomes more meaningful to put this money aside and say, we have a transition from one generation to the next. And maybe I'll summarize by going through, there's a diagram inside here, which I'm calling the book summary on page 9.
Yeah.
So number 1, you need to make some money. After number 1, you need to spend some money, which is where the budgeting comes in. And the difference between what you make and what you spend, you then retain. After retaining this money, you need to identify how to multiply what you retain. That is step 4. And then step 5 is to secure and protect that investment. And then step 6 is to transfer it to the next generation. And the next generation can then make some money, increase that income, and then increase the percentage that is retained. So if we started with 1%, we make it 5%.
Correct.
If we move it from 5%, we make it 10%. And you increase this thing until the amount you're saving and investing is even more than the amount you're relying on for your daily expenses. That's where we are getting to 70% in savings and investment.
Good one.
Thank you, my brother.
Thank you so much. Again, where can guys get the books?
The books, you can go to tonyolang.com, you can go to Nuria Bookstore, you can go to Amazon.
Yeah.
Yes.
Good stuff.
Yes.
Tony, it's been real. Thank you so much for impacting us with some serious knowledge, financial education. I like that. Eeney, Meeney, money and more just got bigger.
Yes.
This one is also a powerful one. Same place you can get it.
Same place. This one is actually a work in progress.
Yeah.
This is a dummy.
Yeah.
So what has happened is this is basic for people who are making entry-level discussions into saving and investment. And for those who have gotten beyond this point, we are now talking about Eeney, Meeney, money and more, and this should be out in the next few months.
Awesome. Fantastic. Yes. Thank you so much, Tony, for coming through. I know we're going to have a part 2 for this conversation. We will continue talking about money. Financial education is such a key component of this show. Asante sana. And contact information in case somebody wants to share your story. How can they reach you? Ama kwa website, pardon.
They can get me through the website or even from Facebook.